I mean, look at Tether now, the biggest buyer, really, private buyer of gold. And not just physical gold. They're buying up the gold royalty companies. They just bought into gold.com, which used to be A-Mark, which is a retailer, like me, only, they have a bunch of different brands under the same umbrella. But, Tether is now branching off not only into gold tokens, but retailing gold. And so they're at the heart of the crypto market. And even they can see the direction that things are going. So it's moving to gold. And to the extent that we're going to have crypto, it's going to be tokenized gold. That's going to be the main, type of token, not tokenized nothing, which Bitcoin is, fiat token, but a token backed by real money, which is tokenized gold. I mean, I'm doing that myself with T-Gold. I've got, I haven't tokenized anything yet, but I'm building the framework for my customers to use gold as a medium of exchange, not just to hold it as a store of value, but to use it in commerce. That's what gold was meant for. Gold is money. And it's the best money. And now with the technology that we have today, it's even better money than it used to be. It's more fungible. It's more divisible. It's more portable. It does everything that Bitcoin promises to do, but can't. And I think that when it comes to stable coins, all the focus has been on tokenized dollars, right? Stable coins backed by the US dollar. And I think that given the choice between having a token pegged to the dollar and having one pegged to gold, gold wins hands down. I mean, look at the track record. Look at how much value the dollar has lost relative to gold. When we started the Federal Reserve in 1913, you could buy an ounce of gold with just $20. $20. Now you need $5,200 to buy the same ounce of gold. So gold has a much better track record than fiat currency, than the dollar. So if you're going to have a stable coin that's stable to the dollar or stable to gold, hands down, you're going to take gold. The only thing that dollar has over gold is that you earn interest on it. Except when you own a stable coin, you don't earn the interest. The issuer keeps the interest. It gives you nothing. And so if you're going to if you're going to hold a non-interest bearing token, one that is stable to the dollar and one that is stable to gold, what are you going to pick? Right? And if I'm a merchant, if I have services that I'm providing, I have goods that I'm selling, and I want to be paid, would I rather be paid in paper or real money? Would I rather get paid in gold? Of course. The only reason I'm not paid in gold now is because it's not easy. It's complicated. But if it's just as easy for me to get gold as dollars, and I can just as easily use my gold to pay my own bills, then why the hell wouldn't I want gold?
Yeah.
I mean, then I can escape inflation. And then, when you have gold, everything gets cheaper. Over time, the longer you hold your gold, the less gold you need to buy stuff. The opposite of what happens with dollars. If you hold dollars, they lose value. You need more dollars in the future to buy the same basket of goods and services, whereas you need less gold. So, I mean, gold is a far superior. And so now that you can tokenize it, I mean, that's what's going to win. There's no reason to have tokenized dollars, but there are a lot of reasons to have tokenized gold. Well, I think the loss of confidence is not just in the rules of the game. It's a loss of confidence in the United States, in our ability to repay our debt. Honestly, not, we can print money and pay our debt. And that's what people are afraid of, that we will print money to pay our debt. We don't have the ability to do it honestly through tax revenue because the debts are too big and the trajectory is just off the charts. And now that the Trump administration has shown its cards on the debt by embracing the big, beautiful bill that took all the Biden deficits and made them worse, there's nobody on Capitol Hill that wants to cut government spending. Nobody wants to reduce the debt. So it's going to grow in perpetuity. So the world wants out. They don't want to hold on to dollars that are destined to lose most of their purchasing power. So central banks are getting out and they're buying gold. Retail investors are getting out too. They're pulling their money out of U.S. assets and they're bringing the money home. They're investing in their own stocks. They're investing in their own bonds, or they're buying precious metals. And this is a trend that is in its infancy and is just getting started. It really began with the election of Trump. And in fact, when Trump was first elected, there was some hope that maybe he will tackle the debt. But once it became obvious that wasn't going to happen, once he sent Elon Musk packing, and he left Washington, with no cuts, it was pretty clear, that we're going over a cliff here. Nobody is going to try to change the direction that we're headed. And so people are just defending themselves. And this has massive implications for the United States because the dollar is going to lose this reserve status, and that's going to take the U.S. economy down because we depend on that. We depend on that to be able to consume goods that we don't produce. We depend on that to borrow money that we don't save. Our whole consumer-based borrow and spend economy doesn't work if the dollar is no longer the reserve currency. And we are losing that privilege. It is happening right in front of our eyes, yet the vast majority of people can't see it. Right? It's the elephant in the room that nobody can see. Look, I think that we are headed for a sovereign debt crisis and a U.S. dollar crisis. I mean, that's what gold is telling you, and that's what seems to be inevitable. This is going to be much worse than the 2008 financial crisis when the problem was the creditworthiness of mortgage borrowers. This is the creditworthiness of the United States, the biggest borrower of them all. And the United States government was able to provide bailout money during the Great Recession in the aftermath of the 2008 financial crisis. But when there's a sovereign debt crisis and a dollar crisis, there is no government bailout that's possible because the government can't bail itself out. And if it tries to print money to bail itself out of a problem that was caused by too much money printing, right? You're just compounding the situation. So this economic crisis is going to be far more, devastating to the typical American, to the economy. And instead of having the government doing something to help you, the government is going to have to take away the support. The government's going to be cutting spending, and it's going to have no choice. So it's going to be doing the opposite of a bailout or a stimulus. They're going to be sucking money out of the economy at the same time that everything is imploding. If they don't do that, then it's hyperinflation. Then your money is worthless. And then we got a whole new set of problems. The demand is growing more in the East than in the West. I mean, the West has a ways to catch up. In fact, for the past couple of years, as there were Eastern buyers, there were Western sellers. I mean, Americans throughout all of 2024 and most of 2025, U.S. retail was a net seller of precious metals. They were selling gold ETFs. Money was being taken out, but the price was going up anyway, despite the fact that Americans were selling. Why was that? Well, that's because the Indians and the Chinese, they were buying. They were buying more than we were selling. But now that Americans have stopped selling and now they're buying too, right? That there's only so much gold there. So the prices have got to go a lot higher. And again, a lot of the crypto demand, money that was going into crypto is going to start going into gold. I think right now you've seen a recent move up in some of the larger cap producers that had underperformed for years because rising costs were undermining their profitability. Even though gold prices were rising, costs were rising a lot as well. I think those stocks have moved a lot in the last couple of years, catching up a little bit with some of the companies that didn't have that exposure, like the royalty companies that were just taking their money off the top line and didn't have to worry about the rising costs. But I think right now, the sweet spot is in a lot of these junior mining companies that didn't participate as much as some of the senior or mid-tier producers in the last year or two. I think that's the best bang for your buck. It's a difficult area of the market to kind of navigate on your own because there's a lot of landmines in with those gold mines. You could lose a lot of money in these smaller companies. But I think a lot of these companies are going to get bought out by the bigger companies that really need to expand their reserves. They haven't been investing in exploration and development, and so they need to replace the gold that they're mining. So I think there's a lot of opportunity there. We've got a great portfolio of junior miners, about a third of my gold fund, Europe Pacific Gold Fund. The no loads ticker symbol is EPGIX. That's the investor class. We've got a great allocation that we've been building for years. And I think we are perfectly positioned for the next leg of this gold stock bull market where we see the smaller companies outperforming the larger companies. So it's a great time to get in, even though the fund is way up, obviously, over the past year or two. It's not up as much as, let's say, the indexes that are dominated by these bigger companies. But I think we're poised to dramatically outperform these indexes over the next few years. Look, I think a lot of it is going to be from M&A. You're going to see a couple of buyouts. That's going to get people reevaluating the valuations in these smaller companies. And a lot of it, too, is just going to be the news cycle as a lot of these gold miners come out with earnings that blow away not only their prior earnings, but estimates. Wall Street is going to start paying attention to this sector. And, the whole time the gold price has been going up,